It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes and or money or whatever you want to talk about. Love letters, having filed, getting calls from the IRS where they're saying they're going to come pick up your children and your husband and your spouse unless you give them $5,000 or something like that. Anyway, I'm joined. We're EG Tax. We want to help you. I got Tiffany Fabian in studio.
Hey there, Esther.
And Christopher Fabian,
Hello,
her husband. They got the same
Esther.
name. I guess they live at the same house, right?
I'm fortunate to.
All right, I'm going to tell you. This week I've been volunteering at Kingdom Bound, and I'm a Christian, and I was there. And one thing I wanted to talk to you about, to get you aware of, there is a movement, but anyway, it's called Reset2016.com, and what they're doing is trying to get as many people that are conservatives that would like to go to Washington July of next year. And I know that I would organize a bus to do it. And so if you're somebody that's concerned about what's going on in Washington and you'd like your voice to be heard, go to Reset 2016, RESET 2016.com, and take a look at, and I guess they're calling it Together 2016.
Right.
But Reset2016.com is the website.
I know I've been listening to the news, and President Obama is in Africa this week, and they said it's like a big homecoming, and so they're all...
Well, that's where his family's roots are.
Right.
And that's fine. I mean, I support missionaries, but I'm just very concerned about, just like what the financial guys were talking about the minimum wage. Hey, look everybody deserves a working wage, but I'm going to tell you, I'm a small business owner, and if minimum wage goes to $15 an hour, I don't know, that means I got to pay my people like $35 an hour, which means that I have to raise prices. So effectively, this ends up to be private welfare that ultimately will be funded by the consumer.
Wow, it's going to cost a lot of money.
I don't,
for the consumers.
The first job I had, I made 50 cents an hour. I know that was back in the Stone Age. True.
I made $4.45.
Right, but it was good to. Don't you feel that you learned a lot?
Oh,
and then you said, I know I don't want to stay at Burger King.
Right, that's where I worked.
At Burger King.
I worked at Burger King, and I didn't make much money, but it taught me a lot.
But the big kicker is, are they going to raise the limits for welfare, the income limits? Because what they're going to end up doing is by raising their wages, not saying that everybody who works at Burger King or McDonald's is on welfare, but some of them are, and they're going to be kicked out of getting their benefits. So,
but the thing is, the good thing, I mean, people should not be on welfare.
Oh, definitely.
They really should not. It's not that I don't want to help people. It's that people need jobs.
Yep.
Right? People need jobs. If social services and handouts is the answer, then we're doomed as a society, in my opinion. But the thing is, you got to help people that can't help themselves. But if somebody can do it, then they should do it. Right?
That's right.
And the thing is, it's education, not working at the fryer at McDonald's. That's everything. So anyway. But so Reset2016.com, if you think that you might be interested in taking a bus ride down to Washington and in July of next year and having your body be seen.
Makes a difference. A voice, that's what it starts. It's a ripple, and it's really important if that's what you believe in.
But let's look at some of the reports that just came out this week, Chris.
Well,
the IRS Watchdog Agency, what's the name of it?
Yeah, I was going to say, talk about reset. The IRS totally reset their figures when it comes to phone customer service this year, and not in a good way. Let's see. They answered only 30...
All right, but who put out the report?
The report was filed by the National Taxpayer Advocate Nina E. Olson.
In other words, people that are trying to watch the IRS to make sure that
they're employed by the IRS to make sure that they handle their customer service.
All right, so what's the report say?
They answered only 37% of taxpayers' calls routed to customer service representatives. The hold time for taxpayers who got through averaged 23 minutes. This level of service represents a sharp drop-off from the 2014 filing service season when they answered 71% of their calls.
So only you call, you got a tax question, you're sitting there, you don't understand how to read your W-2.
Not even a
37% waited. How many?
22.
20. It says an average of 23 minutes.
All right. So, and then what happened to everybody else that called?
That was another stat.
What is that stat?
That stat is the number of courtesy disconnects.
They call this courtesy, so they hang up on you.
Yep.
Okay.
Received by taxpayers calling the IRS skyrocketed from about 544,000 in 2014 to 8.8 million.
Hang-ups.
I think we need to go to Washington.
I'm telling you. I mean, I have to tell you, I'm teetering between the verge of depression because and this has nothing to do with social programs. It has to do with everything going on. It's like everything that I knew my world is getting rocked.
Yep. And the thing is if you owed the IRS or every week out of my paycheck, I pay those people, and so for them not to give me...
And they write the law, and you want to have questions answered.
Yes.
Okay, what else is on that?
So people always ask us about, don't you have a special number you can call? Well, here's a stat on this. The IRS only answered 45% of calls from practitioners who called the IRS on the Practitioner Priority Service line, and those 45% had to at least wait 45 minutes.
Right.
And I want to say it's not just tax questions. The reason I try to call the IRS is to find out where their amendment is, or if my clients owe money, trying to get to the bottom of things. So it's not tax questions, it's letters.
And that's the problem. You have nobody. You're really out there on your own, which is really, really frustrating. Yep. And and 2025, the Social Security Administration, they're launching their new program, and they're basically going to close all of their branch offices and go to automated services as well.
Well, here's another disturbing one.
All right.
The IRS answered only 17% of calls from taxpayers who called after being notified that their identity was already used on a prior tax return.
So then these people, the rest of the people don't even know what to do.
Right.
So they probably haven't filed.
So, 83% of the people whose identity, which we've seen it skyrocket just in our offices this year. I can imagine what the physical number is.
But the thing is, if your identity was stolen, if you went to send your return electronically and the IRS says, oh, it's rejected because we've already received it, you have steps to follow to get your return filed so that you can get your refund. So if you're somebody that's out there and you haven't filed because they said it was already filed, that's because somebody stole your identity and they filed a bogus return, and you need to make steps to
You have to
correct
do
it.
an affidavit from the
And
IRS.
that's another thing that EG Tax
Right.
does. Okay, I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 on a cell phone. We'd love to hear what you have to say. We're going to take a short break, and we'll see you on the other side. Hey! I don't know who this is, but I like the beat.
And I've heard this song many a times.
All right, who is it? All right, Tyler.
It's the Heavy.
It's the Heavy. Yeah, that's how I feel too. Tonight at Kingdom Bound, I got who the heck?
What's the name of the group?
Lecrae is going to be there. And,
they are a jammin' heavy metal.
And 1,000-Foot Crutch.
Oh, not. Oh,
no,
sorry.
Lecrae is a rapper.
And
1,000-Foot Crutch, I don't know. I think at the end of it, I may need crutches, but because really what I do is I sell the merchandise
and the
for these
thing
artists,
is
and then I do the sales tax.
It's a lot of young kids tonight because that's who like the rappers.
So if you're a parent,
so I'm going to wear earplugs.
Yeah, if you're a parent going out there with the kids, let them go in. Come say hi to us at the.
That's right. We'll be at the merchant table. But yeah, it's really interesting. Anyway, I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 on a cell phone. Whatever your question, comment, what you think about minimum wage, if you got a tax problem, think about what do you think about the IRS never answering phone calls anymore, et cetera, et cetera. They don't answer them mostly.
Yeah.
The bulk of the calls are not answered. All right, but we wanted to talk about it's July. We got like 5 months till tax season. Some things you should look at right now is budgeting, because there's no time like getting your budget in shape. Yeah. Like right now, you got some time off. Maybe you're there on your vacation. I will tell you, if you can get you need to take a look at your long-term financial situation, because Social Security, you just can't go to the bank on that anymore. You just can't, and you just got to look at your budget. You have to maintain for yourself, of course, unless you're going to be working as a fry person at McDonald's.
Yeah, but also now with the market being what it did, you have to relook at your portfolio and see what's happening with that, with your 401k, your IRAs, and you may have to readjust right now.
Right. And the thing that I've noticed is time can just escape you, and before you know it, you meant to do it, and 2 years have gone by, and you haven't done it.
It's really interesting. I just talked to somebody the other day about writing things down. Mm-hmm. I work every day from a list. I get up in the morning and I say, okay, what do I want to accomplish today? And I write it down. And I find out when you write it down, you have mentally made a decision to get it done.
Commitment.
And one of the things you should do today is write down that you want to review your budget. Because if you don't write it down, that means you don't care about your budget, which means that things continue to go out of control. They say that if you were off like 2 degrees on a compass and you're on a ship, you would go, by the time your journey was over, you'd be off hundreds and hundreds of miles. So you want to make your budget is your guide.
Oh, yeah.
You really need to look at your budget. So that's number one. Number two, we talk about this all the time. If you're an employee and you don't like what's going on and you don't like waiting for your refund and you're wondering and you hate the letters from the state of New York and you hate the letters from the federal, what can you do at work?
Change your withholding.
And I want to say, while you're looking at changing that withholding, also revisit other things in your work, like your 401k and your flex spending and your child care. If you have those options, I just had a call the other day at the office, and it was a client of mine that can take money and set it aside for work for child care. And when she had 1 kid, we ran the numbers, and it didn't behoove her. However, when they had 2 kids, it saved them money to shake money out of their child care because their wages went up and things like that.
But the only thing is, when you're doing the flexible spending, you have to spend it on what you have, or it ends up being income. So you want to make sure that you're diligent.
Right.
Sometimes you just have to dot the I's and cross the T's.
Don't want to, but you got to.
Right. You just have to do it. All right. And then the other thing is summer deductions. If you have children in daycare, summer camps, as long as it's not an overnight camp, right?
You're okay.
Then it's okay. If it's an overnight camp,
nope, doesn't count.
Can't take it, right?
Right, which is really hard to wrap your head around it. I always remember it. You get to take childcare if you drop them off and you pick them up after work. Well, the same sort of thing with camp. You drop them off and you pick them up in that same time.
But if it's an overnight camp, it does not qualify for the child tax credit, child dependent care credit.
Right, 2441.
Vacation job hunting. Here, everybody's going away to various places, and if you are thinking, well, I really didn't care for the winter last year, and you do a job hunt. If it's truly a job hunt, then your airfare are there for you, or you're driving there round trip, and the number of nights that you spend actually looking for work while the family's on the beach, not their expenses but yours, is tax deductible.
Not bad. Good.
But make sure you keep track of who, what, where, when, and how.
Right. That's exactly right. Now, I said to somebody the other day, you just can't. It's got to be ordinary and necessary. Okay. And so you want to make sure that you really did it, because if you really didn't do it, if you're just trying to look for a deduction, that's not a.
It's so funny. I was driving in my car today, and I was thinking about job expenses, and I should really save my receipts. And I was like, it's got to be ordinary and necessary. And I thought of you, because when I think of ordinary and necessary, I think of Esther.
Why?
I don't know, because you taught me it, I guess.
You can. In other words, it can't be extraordinary.
Right.
So you can't go to the Waldorf Astoria and pay $600
Can't
a night.
buy one of my clients' roses.
When you could, as long as it's under $25.
Right.
Okay, let's go to the phones, and we got Dave on a cell. Hey, Mr. Dave, how can we help you?
Hi, Esther. I'm thinking about retiring next year, and this is my thought process. We have I was planning on taking my profit sharing, my vacation time, everything else. I can put it all into my 401.
Oh, that sounds like a smart man.
And then I was thinking of taking all of my income and also putting it in my 401, since I could put 100%, just pay the Social Security and everything else out.
Uh-huh.
And then after doing all that, then I would have pretty much, let's say, zero income.
Right.
And then retire, and then there'd be no state tax on the pension for the first $20,000.
Well, how old are you, Dave?
I'll be 63 when I retire.
All right, so the first $20,000 is tax-free in New York State anyway.
Correct.
Okay.
For pension.
Yes.
For pension. But of course, if you have put everything away, there's nothing to pay taxes on. You won't pay any federal or state. Don't you need any money to live on?
That's what I was thinking.
Well, I plan on living, I would probably be retiring within the first 4 months of the year.
Okay, but don't you need money to live on?
So I'd live off my, whatever my savings. Wouldn't that be smarter to do that?
Oh my God! You make me
happy.
You make me just
Give
like
goosebumps.
You're just doing it so good. That would be so great. So you're going to live off your savings and put all the money in your 401k plan, right?
Correct.
Dave, have you always been really good with money like this?
No, I think I'm just pretty smart.
Wow, that's really good, Dave. Very good. Because, and I'll explain why. When he takes all of his money and he puts it in his pension plan, effectively you become you have no income. When you live off of your savings, which has already been taxed, or a Roth IRA, then neither of those are taxable. So, and you're going to start collecting Social Security, Dave?
Yes.
Okay. And since you're Social Security, are you single or married?
Married.
All right, and your wife is not working, right?
My wife's not working, but she can't collect for 9 years.
Okay, but the thing is, until your half of your Social Security or other forms of income exceed $32,000, none of that's going to be taxable. So you're going to have your Social Security to live on tax-free, and the rest of your income tax-free, and it's a great plan.
Esther, just a thought. If he makes like $14,000 or $15,000, and his wife doesn't make any money, they might qualify for the pension savers credit, right?
But if he has no income.
Right, and so that's why I was saying maybe he should.
Maybe
he should get some.
So my pension, I will have a pension, but I want to put all my money away.
Okay, but here's the thing, Dave. You and your wife can make like $21,000 before you pay any taxes.
I'll get that in a pension, most likely.
No, but you said you're not going to take any pension, right?
No, I'm going to take the pension.
Oh, you didn't mention that.
Yes, what I'm going to do is I'm going to max out everything.
You're going to put it in the pension. Then how much are you going to withdraw from the pension?
Everything in the 401. I'm going to max out my 401, and then I'm going to retire, which probably would be like maybe in April or May.
All right, but how much are you going to get from your pension, Dave?
My pension, I'm going to guess maybe $20,000.
All right, so and then you have your Social Security. So which will be how much?
I'm going to say ballpark figure. If on an annual, it should come up to around 45. So next year would probably be around less than maybe 40.
Your Social Security?
Oh, Social Security is probably only going to be, I'm going to guess $1,800 a month.
All right, so your Social Security is around 21. So, all right, so half of your Social Security is 10.5, so you're going to be at $30,500. So you won't pay any taxes on your Social Security, and you won't pay any income taxes on your pension as well. So that's a great plan. But if you want to come into the office, we don't charge anything. We'll take a look at all the angles for you, so that you can also look at the years after that too.
Yeah, because I was also thinking if you made a little bit of money, you'd get the pension savers credit, which might be a good thing to do for 2015.
But his pension will knock that out. His social, the pension savers credit. Yep. But that's a great thought, Tiffany. Okay, Dave, that's great. Enjoy retirement.
Thank you very much.
Good planning.
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. Let's see, we're going to go to Terry in Buffalo. Hey, Terry, how can we help you?
Hi, Esther. Hey, thanks. First of all, for the little heads up on the reset next year for things, in Washington, D.C., because that sounds like something I'd be interested in doing.
I'm going to tell you, I really have thought if I I don't know how much it costs to rent a bus, but I'm thinking maybe $2,000.
Yeah. I mean, if a group would email you.
I'd get the bus if we could fill it, and I mean, it would be, because I'm really not much of a political animal. You don't really hear me talk about politics. I really have become very
astute,
fearful. I don't want to say fearful, but you really start to say, "Wow, what's happening here?"
Yeah. I went to Philadelphia before the last election for a Jesus, rally, and I was really disappointed when the election didn't go the way I did. So this year we got to start early and make sure that
Well, reset2016.com. Okay.
Okay, and the reason I called was my mother wants to give me some money. My brother has some medical bills, so she's giving him some money, and then she wants to give the same amount to me. And I said, I really don't need it, but she insists.
Right.
So I wasn't sure how I would do it on my income tax. Would that just go under, for next year, under my wage?
Sure. Good question. So is it cash money that your mom is going to give you?
Yes, she said it doesn't matter how she would give it to me, but,
Cash money is something that you don't have to declare on your tax return. So the nice thing is it doesn't go anywhere, Terry.
Now, if she gives you more than $14,000, then she has to do a gift tax return, but it's not going to cost her any money unless she's a very, 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 very wealthy person.
No, it'd be $2,500.
You're good.
It goes nowhere for you, and your mom's okay.
Right, and it's not deductible to her, but she doesn't have to do a gift tax return either.
Okay, well, great.
All right.
Thank you very much.
All right, thanks, Terry.
Use the money wisely.
That's right. Reset2016.com. All right, thanks, Terry. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to break for news. We'll see you on the other side.
Taylor
Swift.
And the cheaters are going to cheat.
Shake it out. All right, I got one.
That was for you.
One. All right.
Good job.
Of course, Tyler realizes if you do bands like the Black
Forest
Tooth or the Fingernail Group, I never get it. But if they're popular, I might get it. Anyway.
Or old.
No, Chris, you're not old.
No. I said if they're old.
If they're very old. That's because my dad loved big band music, so it was always playing in the house. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on your cell phone. We're helping you with your tax and money questions, getting ready to retire, getting love letters, haven't gotten your refund, got a bill. Give us a call. We want to help you. And I'm going to tell you, if you did get a bill, and even if EG Tax didn't prepare your return, call us. Don't pay it.
I was talking to a client today, and yesterday she got a check for $7,000 from the IRS because I amended several returns and $600 in interest. She is so happy.
Oh, that's so great.
She is so happy.
Wonderful?
Yeah.
That's what I love what we do.
Oh, she's.
Right, but we're talking about stuff you can do. All right, we want to talk about. We were talking about your pensions. Look at if you don't start today, it's like you need to say to yourself, I'm going to make a list of what's important. You need, especially if you have an employer match on your pension. If you don't plan on dying and you're going to get old, you're going to wish you had a pension.
Right.
And you just have to put it into your thinking.
And now, like I say to my clients, there used to be a time when you would get a pension and your company would give you a pension. Right. Now those days are gone, and you have to build your own, and you have to make your own.
Exactly right.
And so you got to start working on it.
You really do. Okay, we're going to go to Dave on the, I don't know if you're on a cell phone, but hey, Dave, how can we help you? David.
Hi, how you guys doing?
Good.
What can we do for you, sir?
I'm recently retired. I need to roll over my IRA into a different fund.
Okay.
And I need to come in and I'd like to meet someone. I need to set up an appointment to meet someone so I can discuss what I need to do.
Absolutely. You know what you can do? You can, if you got a pencil, call our corporate office at 632-7886, and we'll show you
the ramifications.
How to do it.
Maybe give you Jean's phone number.
Right. And maybe, many people think that they should roll over the whole thing. It may be that if he has a married situation that he can maybe take $18,000 out right now. He doesn't have to roll the whole thing over. We'll give you some different perspective on what to do. And there's no charge.
And congratulations.
Yeah.
So I need to call 632-7886
on Monday, and we'll get you in. Okay, Dave?
Okay.
Are you excited,
right.
Dave?
Yes, I am.
Yeah.
All right. Thanks, Dave. Have a good day.
Thank you.
All right. And then let's see. We're going to go to Elian from Lancaster. Hey, Elian, how can we help you?
It's Elaine.
Oh, see?
Sounded like water.
Joe
Elian.
doesn't know how to type it. You typed Elian, Joe. But he can't help it. All right, what can we help you, Elaine?
Well, my husband passed away recently, a few months ago. And I'll be collecting his Social Security as opposed to mine.
Sure.
But I'm still working.
Right.
I'm wondering how this is going to affect my taxes.
Well, how much do you make at your job, Elaine?
$33,000.
Well, how old are you?
67.
Okay. So there is no cap on the amount of money that you can make because you're at normal retirement age. So you're going to make your regular wages, and your husband's Social Security is going to become I would think probably at least 50% taxable, don't you think, Chris?
The first year she could do married filing joint.
I'd say a little bit higher than 50.
But at any rate, it starts when your income, including half of the Social Security, is added together. This first year, because your husband passed away this year, you'll be able to file a joint return, so you're going to have a higher floor of $32,000, and the half of the excess over 32 is going to be taxable, and then it rises from there, so it can be 85% taxable. So if you'd like to call us, we can tell you exactly how much.
I wanted to say, Elaine, you should put more money into your 401k
That's
now.
Correct.
Because then less money would be taxable for Social Security.
If you have that extra income coming in, if you maximize your 401k contribution, that'll reduce the amount of gross income you're getting, and it puts more into your pension for when you retire, and it'll save you the taxability on the Social Security as well. Great point,
well,
Tiffany.
Right now I do put in $7,800 into my 403B, and then besides that, usually when it's tax time, I'll add to my IRA, to an IRA.
But it's an elective deferral, Chris, right?
Yep. It's an elective deferral. You lower your income.
So it's not.
How
a
much
percentage.
can she put in?
She can put in with
like
her
17.5, right?
Yeah.
So it's not a percentage. You can actually put in a specific dollar amount, so you can actually maximize it.
And she could still do the IRA.
Right.
And still do the
IRA because your income's low enough. Yeah.
And then
in other words, what Tiffany's suggesting, and I'm suggesting, and Krista's suggesting, is that now that you have this extra income coming in, if you're financially able to, put as much of it as away as possible, so when you finally do retire, you'll have more money in your pension plan, number one, and number two, you're going to save the taxability.
Right, okay.
Okay?
All right,
and if you want help, you can call us. There's no charge, 632-7886, and we'll go over all the numbers with you, okay?
Okay, great.
Thank you, dear.
Thank you so much.
Bye-bye. That's so sad.
I was met with a client the other day, and her husband unfortunately had passed away, and she is only 56 years old, and she's getting his Social Security. And so we talked about her waiting until she was full retirement age, because if you make more than $15,000 a year, you have to pay $1 back for every two. But we ran the numbers. We sat down together for like an hour, and it's better for her to pay the penalty than to hold off on getting the Social Security.
And the penalty is a repayment.
Right. So it's always good to get a second.
Even understanding that she would get the pop-up if she waits to regular.
I told her to call Social Security. She's going to call to see if there's what's the pop-up.
Because you really do have to look at all the
angles.
Variables. Right?
Yeah.
I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on the cell phone. Love to help you with your tax and financial issues. You know, you're kind of your advocate here. We're going to go to the phone and talk to Jim in Tonawanda. Hey, Jim.
Hello, Esther.
How are you, sir?
Oh, not too bad. Say, my wife and I let our son and his family live in a house that we own rent-free.
Okay.
We also pay the water bill. Does the IRS look at that as a gift?
Well, no, not if you gave him the house, that would be a horse of a different color.
No, we
own the house. Right. As long as you're using it for personal means and as long as the gift doesn't exceed $14,000 a year, then you don't have to do a gift tax return. So you got yourself, your wife, and all those, so you don't have to worry about that. You're good to go.
We don't live with them. They just live in another house that we own.
Right. But no, it's not a problem. You don't have to do a gift tax return. You're entitled to give $14,000 per person per year. And how many people are in the house?
Wife and husband and 2 kids.
So there's 4 people.
14 times 4,
right,
16,
and so
56,000.
56,000. I'm sure that the house, unless it's the Taj Mahal, is not going to, the fair market value rental is not over 56,000, is it?
Well, I don't know. It's about 10 minutes from your main place of business.
But 56,000
a year. You wouldn't get $56,000 rent a year.
I think at the most maybe 2 a month.
Yeah.
2,000 a month, so that's 24,000. So you're good.
You're good. And then don't forget to take the property taxes and the mortgage interest on your own return,
because that's
Jim.
Even though it's not a rental, you still are able to take the property taxes and mortgage
on your
interest that you're paying if you're an itemizer.
Yeah, we do that. In fact, you do it because you do my taxes.
Ah, good.
One other question: what if we gave them, let's say, my son and the wife, each, let's say, $28,000 at the beginning of the year? They started paying us rent from that $28,000. Could we start to depreciate that?
Okay, so here's the problem. Depreciation, well, first of all, it has to be a for-profit motive. So if you are giving them the money to pay the rent, you're going to end up having to claim the income, okay, and the depreciation. So what you're going to do is systematically reduce the cost basis on the house. So when you sell it, you're going to be very sad because you're going to end up paying a bunch of taxes on it. Right now, it's a personal capital asset, and so if you sold it, you'd pay, I'm assuming, 0 or maybe 10% on the gain. It would not behoove you to start depreciating the property.
Yeah, because what Esther's saying is it would go on line 21. I think she's saying line 21 is income because it's not fair market rent, even if you gave them the money. And then you would systematically start depreciating it. When you sold the house, you'd have to add back that
all the depreciation. Believe me, Jim, it's not a good idea.
It sounds like a nightmare.
It is. It'd be a semi-nightmare.
Yeah.
All right?
Okay. Thanks a lot.
Thank you, Jim. Bye-bye. Yeah, I mean, if he got fair rental value, you wouldn't have to do the 21. But, but then he's claiming the income on a Schedule E and reducing it by his expenses.
But I like what he's doing. He's trying to think.
He's trying to think. He's trying to handle
it's so funny. I was listening to the radio today, and it was talking about tax shelters, and it said tax shelters is not really a bad thing like everybody thinks. Tax shelters were 401ks, and so you really got to do what Jim's doing. He's thinking.
You want to think. I'm Esther Gulius, the tax lady. We're going to take a short break. 803-0930. We're not. Oh, that's right. I'm not taking the break now. I'm going to wait till later because I have to get to Kingdom Bound because I have to listen to the hard rock bands tonight. Right?
Yes.
Okay, let's see. We're going to go to John in Wales. Hey, John, how can we help you?
Hi, just had a question. I'm on the road. I don't have any hard information in front of me.
That's no problem.
The last at least 3-4 years, we get a notice that we owe back taxes.
Okay.
We haven't been audited, but we get these notices. We've had the same company do. They've been doing our taxes for at least that time, if not maybe a little bit longer. I don't know if we're itemizing too much. Or
okay,
what we're doing.
John,
always big bills.
You gotta
not ignore it.
You need to get us those notices, and we're going to look at them. Most of the notices that people get, I would say, and I'm trying to be fair, are at least 50 to 75% incorrect. When people pay those notices, all they're doing is giving money to the Internal Revenue in the state of New York that many times they don't owe or only partially owe. So if you would call us on Monday,
and it doesn't matter if another firm did it, we can still call.
That's right. So dig out those notices. I know it's a pain in the keister to do it, but I bet you we will get you back a lot, if not most, of the money you paid in.
And John, I got to tell you, Chris and I, we got a letter from our mortgage company, and had we ignored it, they were our old company our new mortgage company was bought, and so the new mortgage company, M&T, is misappropriating our payments every month, and so had we not called, it would have been bad. And so it was just a phone call, and so you got to make sure.
They were misappropriating your mortgage.
Yeah, we were paid up through September, but they said we were 2 months behind and hitting us with late fees.
Oh my gosh! Plus, it affects your.
I pay extra every month, and
so the whole thing is, John, if you look at tomorrow's Sunday, you're going to get a cup of coffee, go through your records, and get your stuff ready, and call us on Monday, and we will help you, okay?
I'll do that, but I guess and that's good news. And I know now that you jogged my memory, a lot of the bills have been reduced by I did let my tax preparer know. I'll probably be switching, but do you think that there's any kind of correlation between how the taxes are being done and why I'm getting these notices?
Well, only if your tax accountant is not being given all the correct information or is preparing the return doing incorrect laws. So when we take a look at it, we'll let you know, and we're not going to slam whoever you're with. We just want to help you.
And another thing, John, is whatever is happening on the federal is also affecting the state.
Right.
So when you get the letters for the federal, that preparer should also be fixing, correcting, amending New York State or whatever state.
New York State bills you.
And they should be communicating to you what the problem is, that preparer, because you don't want to. Sounds like there should be more communication.
Right. So, John, give us a jingle on Monday. There's no charge. We'll be very happy to look at it for you.
Personally
second
help you.
Opinion, okay?
Oh, thank you.
Thank you, sir. It's really good to have a second opinion. Right?
Yeah.
All right, now we're going to go to Dave. Hey, Dave, how you doing?
How you doing? Thank you for taking the call.
Yeah, no problem.
Okay, here's the situation. My mother passed away a while back. She had an annuity in a trust.
Okay.
My brother and I are beneficiaries of the trust. How does the taxes affect that?
Well, the annuity's in the trust.
The annuity was in the trust.
Okay,
correct?
So then, if you're the beneficiaries of the trust, then the annuity.
When it makes payments.
Yeah, when it makes payments.
Are you getting income right now from that annuity, Dave?
We planned on cashing out the annuity.
All right, so here's the thing.
We have no choice.
All right, so on the 1041, when the fiduciary return is done, the annuity company is going to give the trust a 1099-R, which is going to say that X amount of dollars of this annuity is taxable. So that's going to go from your 1041 to a K1 that the two of you guys are splitting, reduced by any expenses for operating the trust, and then whatever left is going to be an ordinary income on your tax return.
So I'm going to pay on that. It's going to include on my taxes, on my brother's taxes, not on the trust.
Okay, so it all depends on the type of trust you have. If you have the type of a trust that pays the taxes before it's distributed to you, then the trust would pay the taxes. Now, it's much better to distribute than it is to have the trust pay the taxes, because the trust pays taxes at a much higher rate than an individual does. So again, if you want to have us take a look at that, so that we'll tell you whether or not the trust is paying the taxes or it can be distributed to you and you pay the taxes.
Does that answer your question, Dave?
Well, the trust has never paid taxes while my mother had it.
Because it never distributed, right?
Whatever was distributed went directly to her, and she paid it as her income.
Okay, so if the K1 went to her, believe me, it's better for the K1 to go to you. Because if the trust pays the taxes, you're going to pay it at a much higher rate.
All right. Thank you very much.
Thanks, Dave. All right, and then my My last caller here is Mr. Tony. Hey, Tony, you got a comment on minimum wage?
Well, first of all, Esther, are you aware that individuals in this state did not have a raise, a good raise in 10 years? It's been 10 years.
Tony, what does that have to do with the tea in China?
Well, you talked about the idea of the minimum wage.
Well, minimum wage has gone up steadily in the last few years.
No, Esther.
Yes, sir. Tony, I have a company, and minimum wage has gone up in New York State.
When was the last?
Well, I used to make
it went up January 1st of 2015. It went up January 1st of 2014.
But Tony, a 70% increase in minimum wage is abhorrent.
Listen, you're talking about $8.75 January 15th, $9.25 in January of the next year, 2016. If you pay a person, well, first of all, the governor is right. Because in the United States, we subsidize every one of these large corporations to the tune of $23 billion a year in food stamps, welfare, Medicaid, and all these
What are you talking about, Tony? What are you talking about? What do you
seems
mean
like
we're
that's not related.
Subsidizing corporations?
And then food stamps.
Corporations are paying... and individuals that own corporations, especially subchapter S corporations, are paying a lot of money. It's right that there should be a wage that people should be able to have entry level that they would know what it is. But Tony, $15 to make French fries is going to hurt a lot of small businesses and ultimately hurt the employees. And Tony, have you ever owned a company, Tony?
At one time I did.
All right, and did you have employees?
20 years ago.
Did you have employees, Tony?
I had one person.
Okay,
only.
All right. Well, Tony, I have 150 employees, and I want to tell you, with Obamacare, the employer has to pay the health insurance. They just changed the way that not Social Security, overtime is handled. And so now somebody has to be paid overtime that's a salary employee that didn't before. Then they're raising minimum wage. I want to tell you, many businesses are going to have to close their doors or take the increase that they're being given and shift it on to the consumer. So that means the consumer is paying this tax. And I want to tell you something. It's not as easy as saying we're going to give a restaurant worker a 70% increase, because this is a political football to buy votes. Period.
They're not giving us. They're not giving a.
Tony's going to say it's raised. It's phased in.
70% raise until 2000.
Okay, but Tony, why can they get $1 an hour? Tony, why can they get a $1 an hour raise when other people who can only get a 40-cent raise? And that's someone who works hard, who does math, who does accounting, who does paralegal stuff. They only get a 40-cent an hour raise for these people.
We should give them a 70% raise too, so that maybe we should give them $1,000 an hour. Would that be good? I mean, Tony, this should be entry-level jobs. I started at 50 cents an hour.
Esther, 35 to 40% of the people that work at McDonald's are over the age of 40. That is not an entry job for them.
Tony, you should stop reading Democratic baloney and read something that's true. And if you want to talk to me on Monday, I'll be very happy to give you real statistics. But Tony, businesses cannot afford a 70% increase in minimum wage.
And I think we heard what Tony said. He kept saying that it's not all at once. It's going to be phased in slowly. And then Chris very rightfully said, Tony, usually when I go and sit down with my supervisor, I'll get a 20-cent raise and a bonus. So, I mean, increase in my pay. These people are going to get a dollar.
This is inflationary, too. I mean... Oh wow!
I mean, but let Tony pay $6 for a loaf of bread because the person, and the dollar menu at Wegmans
and because this is
McDonald's go to $3 menu.
You don't really think that somebody? It was interesting because my girlfriend's here from Florida, and she gets $15 an hour to manage a store in Florida, and she says, "Wow." Your people are going to be getting $15 an hour to cook French fries. She says that means that I should get $30 an hour, and that's exactly what's going to happen. The bottom line is, the consumer's going to pay, because either the business goes out of business. Now they got the Obamacare they got to pay, plus the extra overtime, plus the extra minimum wage. But let's face it, we are paying for votes, plain and simple. Okay, we're going to go to Nelson. Hey, Nelson, how can we help you?
Hi, yes, sir. I've met you personally at tax time.
Yeah.
Let me just. I own a restaurant, Esther, and this last gentleman that was on, it upsets me is there's so many people that think like that, and I wish they had the capacity to, or go back to economics and see what actually happens with this stuff, the ripple effect.
Believe me, Nelson, I own a business. I try to balance out.
And so does
I
Nelson.
don't want to raise my prices. Because I don't want to raise my prices because I want to help people. But I have to pay X amount of things that are mandated by the federal government. I understand that. But the thing is, if somebody told me I had to raise my wages 70%, I want to tell you, Nelson, I'd either have to go bankrupt or raise my prices, which then hurts all my taxes.
So you as a restaurant owner...
Right now, you did the taxes for the restaurant this last year.
Yeah.
And I'll tell you, the numbers that we're getting right now with the minimum wage increases coming up this December, she has to, and I mean has to, just to keep things level, raise the prices on the menu 26% across the board.
And so what happens... And what do your customers say? Wow, Nelson, you are really just
they're
going to
vote with their feet.
Right. I mean, what this is inflationary, plain and simple.
Can I ask you a question, Esther? Maybe you can clarify something.
Yeah.
I was talking to Glenn on the previous program, and I love those guys. Let me ask you, the conversation that's going through is on what I think is a misinterpretation by them also, is that this franchise thing about 30...
The 30 offices.
It's the real thing is if the franchise corporation, looks like McDonald's, a national, international company, if they have the representation of 30 franchise operations in their fold, then that applies.
Well, that's the interesting I was just talking to Glenn before the show, and he mentioned your conversation, and I said, until the law is written, nobody's really going to know the specifics. But I will tell you, keep us in the loop here, because we will definitely find out. Because right now, everything it's very vague. So until the law is written, right now it's just the highlights. So we'll keep you posted.
Well, I know Time Warner Cable covered it, and I was watching the program, and they clarified it very, very well with the representatives they had.
So I really think it's going to be for most restaurants.
Oh, sure.
Yeah,
and
that's what I think. I don't think it's just for one. Yeah.
The laissez-faire is going to kick in. The competition for labor. We're going to lose employees.
Absolutely.
Don't want to go there.
Absolutely.
And on top of this gentleman that said that 30-40% are whatever the percentage are family owners or older people.
Right.
I have not been in a McDonald's. I do not look across the counter and see a young person that's 22, 23, 19.
Right.
I don't see older people in there.
Right.
Not really.
Well, it's always fun to make up facts. That's all I can say. But hard facts are something different. All right, Nelson, thanks for calling.
Thanks, Esther.
Thank you, sir.
Bye-bye.
I'm Esther Golias, the tax lady from EG Tax. We'll see you next Saturday. Again, if you need any help, call us at EG Tax. Thank you. Bye-bye.